Okay. Our first, I am looking forward to hearing, as anyone who's been downtown or followed the news, Indigo Ag moving downtown and filling what was a kind of half-empty space in a beautiful building was incredibly exciting for all of us to bring the kind of jobs. We want all the jobs, but to bring the kind of jobs they did, it was very exciting. I walk by there most every day. Our office isn't far away, and you see a whole lot of people in meetings and with spreadsheets out and working really hard and doing important things. So Paul Dacier is General Counsel with Indigo Ag.
Thank you, Eric. Good afternoon, everyone. It's a privilege to speak before you today about Indigo, our commitment to Memphis, and the state of Tennessee. Let's talk about Indigo. Indigo was founded a few years ago in Boston, and the reason is that our founder was doing medical research on the microbiome and the body. And it dawned on him when he was doing that research, why can't that also be the same element of research for seed? And through that, we have found that through natural biology, through DNA research, extracting the microbiome from seed tissue can be used to stimulate the seed to grow better, to end up with a stronger plant with a greater yield per acre. We feel this is a fundamental way to change how the world is fed. We started in Charlestown, and over the past few years, we expanded from Charlestown, Massachusetts, to Memphis. And we feel that as we continue to grow now, we will have a foothold not only here in North America, but around the world. And therefore, we are in Brazil, Argentina, Australia. We have a joint venture in India, and we just opened our international headquarters in Basel, Switzerland. Why do we feel this is important? Well, you can see that through our work, the world is focused in on sustainability, and sustainability practices and good farming is part of that. And we believe that through this, we can enhance not only what we're doing from a growing point of view, enhance profitability for the farmer, but also lead to a safer and more cleaner and more environmentally sensitive world for us and for the next generations to come. Through this, we have, with great excitement, announced a few months ago what we call the Teraton Initiative. There are trillions and trillions of bits of carbon in the atmosphere. Since the Industrial Revolution, this number has gone up exponentially. We forecast that over the next several years, the current number of carbon atoms in the atmosphere will again increase exponentially. This is and will continue to cause changes to the world's climate. One of the things we can do is support, enhance, and encourage better agricultural practices. And through this, in working with the farming community and with industry and individuals here in the United States and eventually around the world, we feel that we can engage in carbon sequestration practices that will reduce by 1 trillion tons the amount of carbon in the atmosphere. This can be done, and as you all know from your days in biology in grade school and high school or beyond, plants absorb carbon dioxide. They turn that into food, and that causes plants to grow more robustly. We feel through the concerted effort of all of us, we can quickly reduce the amount of carbon in the atmosphere. We also feel we can do this through government incentives at the federal, state, and local level, and we have active discussions ongoing now in Washington with policymakers at the highest levels of the United States, below the level of the president, in regard to what can we do on better agricultural practices. Now, Memphis, we are here, as mentioned. We were in the Toyota Plaza. We're excited that it is now known as the Indigo Plaza. We have just over 100,000 square feet in town. We have just over 400 employees here in town. We like Memphis. We're committed to Memphis because it's an excellent area to draw upon for employees, individuals, well-trained, well-educated. The demographics are excellent, and it also has us closest to our customers, which are the farmers. We also have other operations here, including our big data analytics group and our research group called Indigo Research Partners. We see more things for us in Memphis, but also we're involved with the state. Let's see. We feel that we can add to our employee population and grow at least by 50%, if not more, because the cost of doing business in Memphis is a fraction of that which it is in Massachusetts. We will continue to keep our Sciences Center in Charlestown. However, we see most of the growth in our North American operations here in Memphis. Our commitment to the state also includes that for our students in the schools, and we have aligned ourselves with a few of the local universities to enhance their knowledge and have them focus in on agricultural and agronomy practices, including digital analytics. We see this as a new cutting-edge area for those students here in Tennessee and what they will do upon graduation. We also have, with David Perry, worked with the governor. There is an appointment by the governor to chair one of the task forces that was just established by statute. And David has worked with this group, and they will be issuing a report in February about what can be done to enhance, again, the educational programs statewide for our students. The bottom line, ladies and gentlemen, is that we at Indigo are committed to Memphis and Tennessee. We're excited to be here, and we look forward to growing and changing the world together. Thank you very much.
And again, if I didn't say it early on, we will do Q&A, including with Paul, because there's really interesting things going on there, and after everyone speaks. But this is Ron Riley, Senior Vice President for Colliers International. Thanks for being here.
Thank you. Good afternoon, everyone, and thank you for coming out today. I'd like to say a special thank you to the Daily Memphian for hosting this seminar, as well as a special thank you to those supporting sponsors that helped make this event possible today. We gather for events like this typically once, twice a year, and generally speaking, the industrial market seems to grab the lion's share of the attention. I think you're going to hear more good things about industrial here in a minute, but I'm happy to say that the office market right now has a ton of positive momentum going on, and I have 3 slides that I'm going to show you today. I'm going to talk about the downtown happenings, if you will, everything that's going on in downtown. I'm going to talk to you about the investment sales market and how that relates to the overall leasing market in Memphis. And then I've got some kind of a look forward, some facts, projections that I see for the next 12 to 14 months. So let's get right into it. What we have here is a map of downtown Memphis. You can quickly take a look at this and within 10 to 15 seconds discern that there is a lot of positive activity happening right now in the Memphis market. I have broken this down. It is cut off at the bottom, but what you see in purple are future developments. What you see in blue are big tenant moves, and what you see in red is the eventual vacating of Raymond James from downtown. So let's start with the good stuff. Let's talk a little bit about the big tenant moves for downtown. We'll start at the top with True Temper Sports. True Temper Sports recently executed a lease to, they have been in Southwind for over 20 years. They have decided to go downtown to One Commerce Square and locate their headquarters in that building. In addition, another company out of Boston, Prospero Health. This one didn't get quite the splash as the Indigo Ag did. However, Prospero has stated that over the next 5 years, they do plan to scale their employee headcount up to 250 employees. That should put them in about 40 to 50,000 square feet by the time they scale into that facility. AutoZone purchased the former Nedak Bobo buildings downtown to further their footprint. The commercial appeal, they sold their owned facility that they were in since 1975 about 2 years ago. They did a leaseback for a couple of years, and just this year they have right-sized into Pembroke Square. Of course, one of the larger announcements this past year was FedEx Trade Networks and them announcing that they would relocate their corporate headquarters to downtown into the former Gibson Guitar Factory and transform that in that building and its use to an office use. They will occupy 195,100 square feet, and as a precursor to that project being completed, they took space in Peabody Place to get some executives entrenched in the downtown market. And then we had the pleasure of hearing Paul talk about Indigo Ag. This announcement did occur not this past year in 2019, but prior. But Paul did mention it. One thing I wanted to point out that some folks aren't familiar with is that the square footage requirement has actually increased up to, as Paul alluded, over 100,000. It's 103,500 square feet. What you see in blue represents approximately 450,000 square feet of space that has been leased in the downtown market, or once all of these operations are complete and scaled into. This accounts for 2,166 new jobs to downtown that were not downtown otherwise. That is a ton of positive momentum for the downtown submarket. Now, if we're going to talk about the good, we do have to talk about the bad as well too, from the standpoint of downtown submarket. Raymond James in the news recently has stated that they will vacate 50 North Front as soon as next year, likely no later than the summer of 2021. They will pull out of the building in its entirety, along with vacating their employees from that building. If you were ever going to have a building of quality with the amount of contiguous vacant space, we're in a great environment downtown for this building to be well positioned for the next Indigo Ag of the world, Prospero, or possible relocation of a large corporate user such as FedEx. I do believe that them vacating the building will have an impact on one or multiples of these potential future developments. Now, I have 5 of them spotlighted here. Just real briefly, I put them into 2 separate buckets. The first bucket being One Beale, the Clipper Building, and Union Row. All 3 of these developers have stated that they want to do Class A plus, highly amenitized, multi-story office buildings with parking garages. They currently have little to no infrastructure in place. They're going to need 2 primary things for any of these sites to work. They are going to need a corporate client that will step up and be an anchor with an extremely strong balance sheet, as well as they're going to need rents that are going to exceed the $40 per square foot range all in. Just to put that in perspective, it was not too long ago that Memphis's glass ceiling on the rental rates was $30 a foot full service. These rates downtown represent about a 30% premium over the next closest Class A product in the East Memphis submarket. And then we have the commercial appeal site. This is a very interesting location. The building sits on 7 acres. Just to the south of the building is 5.5 acres, just south of Beale Street. There's the ability to do a 12.5 acre development with all the land right there. There are some very exciting renderings that are going back and forth right now internally on this, and I expect an announcement pretty soon to talk about the direction of this property. And then the last one, Kemp mentioned this last year, the former Conwood factory. It has been a year since that was mentioned. However, the developer has been able to further their plans. They can do up to 80,000 square feet of office. They can do multifamily, retail, parking garages. They're looking to build new buildings. The overall significance to this site, along with Grind City Brewery just to the north, this development has the potential to drive a stake in the north end of downtown to really eliminate what is blight in that area currently, and to hopefully accelerate the overall development from the convention center up to this site, such as South Main has been the beneficiary of for the last 10 years or so. Switching gears, we go to, as John alluded, Highwoods had the shock announcement of the year that they intend to vacate. Terry Radford is speaking after me. She'll get more into the individual specifics of these assets and talk about the investment sale component. You do have some outliers here on the map, but what I thought would be interesting is for everyone to really see the tight cluster and concentration of all of these properties within a 3 to 4 block radius on Poplar Avenue. It doesn't, we are following this very closely, as is pretty much everybody in the business is following this very closely. It will be interesting to see how this portfolio gets split, if there are multiple buyers within the individual asset classes, along with the slide that I showed you before. You now have the propensity of tenants that are willing to locate downtown, coupled with you could potentially have more owners of this portfolio. There is the potential that rental rates could see a downward pressure subject to how this gets divided. Consequently, if this gets sold in asset classes and they stay together, I do think that you have the ability for rental rates to have a run up. So a year from now, when whoever's speaking in my place and talking about the office market, I do think it will be an interesting look back to see how these portfolios traded and what overall impact it had on the East Memphis submarket. And then lastly, a couple of forecasts for the next 12 to 14 months. On the bottom left, the $220 million of sales volume, that is what we track internally on assets that we view are highly marketable, that see a lot of multi-tenant activity within them. It's very easy to see from that prior slide that we will likely be 50%, even higher than that, over the next 12 months. I do believe as a result of the Highwoods exiting, we are talking to several owners right now. They are taking a wait-and-see approach to see what this may mean for overall price per square foot, cap rates, and how this may impact their properties. As a result of Highwoods vacating, it is very likely that we will see some other high-profile properties come to market sooner rather than later that may not have otherwise. The new ownership, I already mentioned Highwoods. I am, at the top right, I am fairly confident that there will be an announcement of a kickoff or two for a new office development, and could be sooner rather than later, certainly by the end of 2020. I thought I would give a couple of stats. Absorption, I do believe you're going to have a lot of shuffling between Raymond James going out east. You'll see some submarkets that will have some negative absorption. Some will have some positive absorption, but overall, I do believe will be likely flat to negative for the entire year. Rental rates likely to be flat to a slight uptick, subject to how the Highwoods portfolio transacts. I guess the last, my best nugget I can leave with you today from the office world is that overall the pipeline for leasing continues to be robust. It's as strong now as I've ever seen it, and I've been in the business 22 years now. So it is very robust. We see no indication, certainly in the foreseeable future and talking into 2020, why that should slow down, absent some external force and overall market macroeconomic conditions. Thank you very much for your attention today.
Thank you very much. Next up is Terry Radford, First Vice President from CBRE.
Hey, everybody. Most of you who know me know this is not my core, so please be patient. I appreciate it. My core, office investment sales in retail and industrial, yes, but not presenting. But I'm here to present industrial as I said, office and in retail investment sales. Kind of give a highlight on a national level as well as a local level. And on the coverage on the local level, I'll cover transactions that have closed to date this year, as well as transactions that are on the market and that we anticipate to close this year or early next year. Overall, the market is good. It's actually really good. However, what you'll see throughout this presentation, especially on a national level, is that buyers are trending towards more conservative acquisition strategies. They are really narrowing their focus to assets that they feel will weather a recession. Apologize, go back. The national investment sales volume by product type, you'll see on a national level that the office sales are leading with 98 billion, but the industrial volume at 78 billion, that's actually significantly more activity. It is the most active product in the market. Memphis. We are definitely an industrial town, as you will see. We have transacted 625 million in sales this year since January, and we have a couple more portfolios on the market currently. We might not hit the billion we hit last year, but we'll be close. We'll be closer to a billion than not. And then office volume, 126 million year to date, with the retail lagging at 92 million in trend with the national. The national industrial market, the trend is again going to safety right now. The market is excellent, especially in industrial, but that is what we're seeing. And industrial is a very low capital exposure asset. Low cost to operate during a recession or a downturn, and definitely a low cost to re-tenant coming out of a recession in the event there is vacancy. 40.6 billion, that was the transaction volume for the third quarter of 2019. 18.7 billion of that was the Blackstone's acquisition of GLP, but it was a record quarter, both on a portfolio level as well as a single asset sale. Tremendous. And we expect the next couple of quarters to be very strong as well. Prologis just announced they're going to acquire Liberty Properties Trust, and that's about a 13 billion transaction. 12% year over year, that's the price increase on a national level. It's been extraordinary. We're in 31 consecutive quarters of rent growth for industrial, and that is driving that price increase as well as just market demand and historic low vacancy. The Memphis industrial market. Increased pricing following the national trend. It was just a few years ago, we hit the $40 per square foot benchmark for newer product. Now we're in the 50s, then we hit the 50s in 2018, and in 2019 we're breaking $60 per square foot. We actually, a couple of the IDI buildings broke $60 per square foot last year, but it's becoming more and more consistent at $60 per square foot for newer product. And historically, a lot of Memphis assets have been packaged in multi-market deals to support the pricing. But actually, Memphis can firmly hold its own now. We've had 5+ transactions in the $50 million range, and those were single assets in the Memphis market with tremendous activity. And we're getting more and more on the institutional side. We've always had institutional owners in the market, but it's becoming more and more, and especially on foreign funds, more and more foreign. We had a South Korean first in this last offering. For DeSoto County, they were just most recently ranked number 3 in the nation in terms of absorption for the past year. The year ending the third quarter 2019, approximately 5 million square feet of absorption. I know Jack will cover that heavily. And I apologize. One thing I wanted to mention, I mentioned the $60 per square foot in the price growth, the cap rate compression. We're solidly in the mid 5% for our newer construction now. We've never seen 5 caps in the Memphis market until this cycle. Notable industrial sales. I-22 Logistics Park, it's an Olive Branch. Cooper Tire, that's part of Gateway Global. Both of those transactions were long-term lease deals. They both traded in the mid 5 caps. CBRE Global Investors, they've been out of the market for over 15 years, and they entered the market again with both of these assets. Legacy Park, Building 3 and 4, another Olive Branch asset, newer construction, traded this year, as you'll see, $56.65 per square foot. You'll see this, you probably noticed, I-22 traded north of 60, $63.50 per square foot. So we're solidly approaching 60. This Ford distribution center, I added it. It's some older construction, not old, but terribly old, 1991, but compared to the previous comps. And it's still traded at $44.60 per square foot. Ford had about 5 years remaining on its lease, and it was a mid-6 gap. It was Stag Industrial's first acquisition in the market. They've been circling for a long time. The Space Center portfolio, that was part of a 19 million square foot portfolio, with 1.3 million being here in Memphis, and the total of that 1.3 million was $52 million. And you'll see a 38.68 per square foot. That a couple of the buildings were 1970s vintage. So it's very impressive when you consider the vintage. Deals in the market. Sealy has about 16 million square feet on the market nationally, and 3 million of that is here in Memphis. A buyer has been selected, and we expect it to close this year. Panattoni also has a portfolio on the market, has several buildings out at Gateway Global, Amazon, Corel, and another building, Roxel, as well as 2 buildings in South Haven. So it's 3.5 million square feet here, but it is also a national portfolio at 7 million square feet total. We expect a portion of that, if not all, to close this year as well. The office market. On a national level, it's also a trend towards safety. Buyers are not focusing on portfolio sales, multi-market, I should say, portfolio sales. They're focusing on single assets, and they're searching for quality. I have a picture of Crescent here because they are looking at trophy best in class. That is what they want. The pricing is still climbing, although it's not climbing as fast. It's being pulled back somewhat by suburban office assets. Suburban got hit extremely hard during the last downturn, so buyers are shying away from it. And also 20% down year over year is non-major metros, so they're focusing on core markets. Those are the trends, but it's definitely not always the case. In Memphis, we've been a tremendous benefactor of highly competitive markets like Nashville. And we have seen new buyers in the market and a lot very active buyers in the market. Priam is one of them. They've purchased 5 buildings in recent years. We're continuing to see an increase in the number of offers per marketing, as well as the number of offers received. Increased number of confidentialities executed, which means offering packages out in the marketplace, as well as the number of offers. In the past 24 months, they've been some of the most active on record. We've sold 1.75 million square feet to Group RMC alone, not to mention the Priam's acquisition of approximately 500,000. Notable office sales for this year: Lenox Office Park. It traded for $32 million back in July. The $82 per square foot might seem a bit low for an asset of that quality in terms of building construction. It had some pressure because of the larger park. There's an A, B, and G building as well, A, B, and G buildings, and all those buildings were purchased at a very low price per square foot because they were largely vacant. So the investors were very sensitive to that, but we got the most offers that we've ever received on an office offering on this, and they were credible offers as well. Not as much interest in this one, but it's a fabulous park. It truly is. And Talcott, they maintained it with institutional quality to the very end, and they certainly didn't have to. They were great citizens in the market in terms of landowners, property owners. But Group RMC, they purchased this for $33.35 per square foot. The effective occupancy when we went to market was 40%. Sedgwick occupied about 80,000 square feet in here, as did CBRE, had 20,000 square feet. So there was 100,000 square feet it was exiting this asset at the time of marketing. And the Crye-Leike headquarters. Crye-Leike did a sale leaseback in 2007. And so this transaction was a representation of the investor that purchased from Crye-Leike. And it transacted for $15.9 million, or $165 a foot. And deals in the market. Thank you, Ron, for that great map. But the Highwoods portfolio, these are the assets that are currently out there at the moment. International Place 4, we're in the process of selecting a buyer right now, and we anticipate it closing by year end. Crescent Center, Triad Center, and IP2, we expect those assets, we expect to have a buyer by year end on those. The call for offers date is November 21st. and we expect a first quarter closing on those. The other assets, Centrum, Colonnade, and Penmark, those assets will come on later next year, maybe mid next year, expected to close by year end 2020. The Fairpoint office portfolio, that's a portfolio that Landon Williams with Cushman has out, along with Brian Califf and Elliot Embry with NAI. They also hope to select a buyer by year end and close first quarter of this year. The retail market. As has been heard for quite a number of years now, e-commerce, the Amazon effect, is substantial, and it is impacting retail. And what it is doing, it is especially right now, with buyers going to a more conservative approach, is driving them to grocery-anchored centers because they're just less subject to discretionary spending decreases. Everybody has to grocery shop, and a lot of what you see adjacent to grocery are dry cleaners and the like, food, restaurants. It's just service-oriented and less sensitive to Amazon. So that's what we're seeing. Pricing is continuing to increase, but just ever so slightly. The retail market in Memphis, strong demographics is the driver, as is fairly obvious with retail, but what's what we know is, especially from a marketing perspective, the intensity of interest for any asset that comes on the market along Poplar is extraordinary. That's where it's at, and that is exactly where all of these tenants landed: Trader Joe's, REI, Nordstrom Rack, and the Container Store on Poplar. And the addition of these retailers, it just really underscores in us as a retail market. It's going to bring new capital to our market. Retail has been a challenge more than the other product types. Industrial, easy. Office, still a challenge, but it can be done on Poplar. And retail, it's been extremely difficult, but these tenants are bringing them. Notable retail sales, Sprouts. That's the Sprouts location on Perkins. It had about 7.5 years remaining on its lease, and it traded for a mid-6 cap. The challenge on that one was that the parking part of it was ground leased from the railroad, and it was a short-term ground lease. The Crossing, this is a Fairpoint transaction in Olive Branch, traded for $6.3 million or $150 a foot, and the cap rate on that was approximately 9%. Center City Shopping Center, this is on Poplar in Midtown, and it's shadow anchored by Home Depot. Another Fairpoint transaction, $7,225,000 or $115 a foot, and it traded in the 8 caps. And I added this one, even though it's a small deal size, it's a very large box on Germantown Parkway. $3.5 million is what the former Super Target sold for, adjacent to the Super Walmart in Cordova. And it's going to be converted to climate-controlled storage. Deals in the market, Germantown Collection. It is anchored by Trader Joe's and Container Store Nest Decor, and the offering also includes the small shop space, which has the Chili's and Panera Bread and the like. We have seen a record number of confidentiality agreements out on this. Of course, Trader Joe's is driving it, but the Germantown demographics are as well. We're right at 100 offering packages out on this one. We hope to select a buyer by year end and close early next year. Millington Farms, this one actually just closed yesterday. The broker told me it traded about an 8.5 cap. It's obviously in Millington, and new construction. We're all stressed for less. As you can see, I think Goody's was in there, Five Below and the like. Gil Ryan developed it. And I added some bullet points on multifamily. Johnny and I don't sell multifamily, but I pulled these from Tommy and Blake's third quarter report, and our multifamily is thriving as well. It's a good story all the way around. With Midtown, is actually the Midtown new construction I thought was interesting, is driving higher rates than our new construction downtown. Strong sales volume as well. Leave that up for just a moment. I won't read it to you. But thank you so much.
Thank you very much. Next up is Jack Wohrman, Senior Vice President of JLL.
Thank you, Daily Memphian, for having me. I appreciate it, and I guess I am going to be speaking about industrial real estate. There's a lot of positive things to talk about, so I'll try and stay within my 8-minute window and get us out of here to the cocktail place a little sooner. A few observations I'd like to point out at first, and we'll take a deeper dive into many of these. One, rents continue to rise as vacancy drops. We're down to 5.3% overall vacancy in the market. That's as low as we've ever been, extremely tight market. Second, the development pipeline pushes forward with 8.7 million square feet under construction right now. We've had 3.6 million feet delivered year to date. So, we're talking 12 plus million square feet. Very, very high levels. We haven't seen that in Memphis before. Fortunately, there's a lot of activity on that space. As Terry mentioned earlier, property values will continue to escalate, in my opinion, and we can touch on that a little more later. This is just overall market stat sheet. One thing I didn't talk about is the tenant demand. So year to date, net absorption sitting at about 4 million square feet. Year to date deliveries, like I said earlier, is 3.6 million. So it's healthy when you have the absorption higher than the deliveries. And again, we've got that 8.7 million feet coming online. So hopefully the absorption will keep up close to that. Average asking rents in the market, $3.06 a foot. That's increased, as I mentioned earlier, and we'll talk a little more about that. I always like to go back and look at a little historical and see where we were, where we are now, and how we got there. So red here is vacancy rate. The black is the asking rental rate. You can see back in 2012, we were at 12% vacancy in this market. As you can see, that line has decreased significantly down to 5.3%. Asking rents back in 2010, on the heels of the recession, we're sitting at $2.38 a foot. We've climbed up to $3.06 a foot now, and that's overall. That's Class A, B, C, the whole market. So Class A rates are a good bit higher than that 306 number. This is nationally speaking. It's not too dissimilar from the way we looked. The high on the national perspective got up to 10% in 2009. Is down to 4.9%. One thing I like to point out there, that's we're obviously very close to the national average at 5.3 here and 4.9 nationally. About 3 years ago, we were about 150 basis points higher than the national average in Memphis. So we've really dropped our vacancy a good bit more than the national vacancy has happened over the last 3 years. And at $606 a foot, national asking rates, that's obviously a lot more expensive than what we have here in Memphis. It's double. So, I think something Paul mentioned, we're a very affordable place to do business. And, you can either come get twice as much warehouse space here for same amount of money or spend half as much to be here. So I think that's a good driver for Memphis going forward. We like to track the absorption versus deliveries. I touched on a little bit on the stat sheet. So in red, you're looking at deliveries, and black is absorption. Always want to make sure your deliveries aren't far outweighing your absorption year over year, and especially a couple of years in a row. That's how you get a little out of whack. As you can see, 2015, we didn't have much construction going on, but we had a ton of absorption. So that's where our vacancy started dropping off. And then we've had good, healthy growth, a good bit of construction, but also, a good bit of absorption to offset the new delivery. So good, healthy growth over the last 4 or 5 year window. This is a national slide, very, very similar trend you'll see. And, I guess nationally they're starting to get, the deliveries have been higher than the absorption, and so hopefully the absorption keeps up with the deliveries. Here's a little more granular detail. I've gone kind of stat heavy. Sorry for that. Here's some deals that have been done in the last 12 months. Some large leasing activity. Top left view, leased 510,000 feet in Crossroads Distribution Center. We're fortunate to be involved in that deal. Protective Industrial Products leased a 815,000 foot building. That was a spec building. They initially took 600,000 feet, and shortly thereafter went and took the balance of the building. Nike, 700,000 feet in Marshall County, and Protective Products, they were in Olive Branch. Nike, this 700,000 foot building lease was signed, took the full building while it was under construction. That's an important fact, just because we haven't seen a whole lot of that on spec buildings where they get leased during construction, but that's one. H&M was at the right place at the right time, and Nike continues to expand in our market. Kellogg's, 770,000 feet. They also went to Marshall County, and Panettone's Gateway Global. That was somewhat of a hybrid spec building. Panettone had started a 550,000 foot spec building, and Kellogg's came along and they built them a little larger footprint. Top right, Corel Brands, they leased 1.1 million square feet, also in Gateway Global from Panettone. There's a manufacturing component to that development. And then lastly, Amazon, I want to point this one out. It's a 550,000 foot building Panettone had up spec, and Amazon came along, and they're retrofitting that to accommodate their hazmat facility. So they're going to put all hazmat product into that. It's the first fully dedicated hazmat facility that they have in their entire network. So that landed here. All right, back to the under construction. 8.6 million square feet. I don't have enough room on the slide to get everything. So if I didn't include your building, I'm sorry. Fresenius here on the top left, that's a build-to-suit that was done by IDI in South Haven, 211,000 feet. It's a specialized building with about 70,000 feet of lab space and about 70,000 feet of office space, and actually a small warehouse component. The reason I put that on here is they came to Memphis because of FedEx and their ability to do work for many more hours in the day and be much more efficient here. With the lab component of that, that building is the cost of that building is much or more than these other big box buildings on the slide here. IDI is building Crossroads J in Olive Branch, 766,000 foot building. The walls are going up now. DeSoto 55 building D, 860,000 foot building. That's Core 5 is building that along with two other buildings at the same time. They got two 300,000 foot buildings going up that those are going to deliver. It's really going to probably go into early next year. Fayette Trade Center, Hillwood's got a 630,000 foot building on a spec basis being built, going to deliver early next year. That's one of the first spec buildings we've seen on the Tennessee side. Nike is a duplicate. I had it on the last slide. I think it's important that Nike continues to take on more space here, and then that building was leased during construction. Gateway Global, Spec 9, I mentioned Gateway Global on some of the other deals that were done on the last slide. Panettone's had a tremendous amount of success there. This is, they've got Spec 9 and 10 going right now. This 554,000 foot footprint has been extremely successful for them, where they've landed 554,000 foot tenants or buyers. They've also expanded it a decent amount. The other building is the first smaller building in Marshall County that we've seen, and it's a 291,000 foot building that has some pre-leasing in place. So stepping back a little bit and getting into a little more detail on some things we covered, you've got, sorry, I can't see all the slide. Year to date, 3.6 million feet's been delivered. Of that, you've got 78% of that's pre-leased. So developers are pretty happy with that. The total vacancy, as I mentioned, is 5.3%. That's down 90 basis points year over year. So you look back a year ago this time, it was up over 6%. So good, healthy absorption there to do that. Direct asking rents, $3.06 a foot. That's almost a 5% year over year increase. We don't see those kinds of increases in Memphis that often. We kind of slowly move up or down. So that's a big pop for us. And then the 8.7 million square feet under construction. That sounds like a lot. A lot of developers were probably a little nervous when they started kicking off those buildings earlier this year. However, 48% of those are pre-leased, and there's a lot of activity going on on these new buildings that are under construction. I'd venture to guess that there's a decent chance that that number could be 65, 70% pre-leased by year end or in January of 2020. So Terry touched on a lot of this, but here's just a chart on where industrial cap rates have been. You see, back in 2010, they were up at 8.4%. They've tightened up about 200 basis points to 6.3% today. And so a lot of that's just from what she mentioned, the amount of capital allocation to the industrial sector continues to increase, and it's used to be down and dirty industrial real estate that institutional investors didn't really allocate funds for. Now it's a high allocation. Here's a national Class A cap rate map. As you see, Memphis is sitting here in the 5.25% to 6% range. We're in line with a good bit of our peer cities that we compete with on a daily basis, and something that I think is important to look at is New Jersey, the Inland Empire, some of these more major markets. These cap rates are dropping down below 4%, and so an investor gets paid to come to Memphis. They're getting a higher yield if they come here, and obviously going back to where our vacancies are, our rents are increasing. It's a pretty safe place to come invest. So I think that's why we're seeing more and more investors come to Memphis for industrial real estate. So forecast. I think rents are going to continue to increase. I think we're going to continue that upward trajectory there. Development will continue. The amount of leasing that's going on and interest in the product that's under construction now is strong enough. Most developers either have gone and found new land positions that are getting close to being out of land. They have some more land, or some are scurrying to get more land to continue building once these new buildings come online and leased. And I think lastly, capital will continue to flow into the Memphis industrial real estate market. So thank you.
Carson Claybrook is Vice President of Retail Brokerage Services, Cushman Wakefield Commercial Advisors. Thank you.
Thanks for the DM for putting this on, and everybody coming out today in such a gross day. So we're going to talk about a few things in retail. First, we're going to start with the just a numbers year in review at a glance. And so we're tracking 89 million square feet of inventory. We're looking at a vacancy rate of 4.4%, which is hovering around the all-time low that Memphis has had over the history. As I guess comparison, the all-time high was about 9.9 in 2012. This year to date, 138 square feet of absorption, and this rental rate is an average market rental rate over everything, includes enclosed malls. We get our statistics from CoStar. As Terry talked about, Poplar from the river all the way out to Collierville, Union Avenue, your major commercial thoroughfares, your rental rates are holding steady in higher numbers with new development. Looking at new tenants and categories of tenants and active tenants in 2019. Chick-fil-A is back in the market looking around, opening new stores in some holes that they have had and did not fill previously. They opened a location at Getwell and Goodman Road, another one in Bartlett, and they are still active. Starbucks has been very active. I'm sure most of you have noticed their new stores as you probably all get their coffee. Bojangles has teased the market for a while and is now touring. So that will be a new tenant we will see to the market probably, I would say, Q1, Q2 of next year. Crystal has continued to be active with new stores as well as renovations. They've renovated a lot of their old stores throughout the city and seem to be doing well. Freddy's is active as well, have done 4 stores and have 1 under construction in Bartlett right now, and are looking for a few other holes to fill before they move on to the next market. Guthrie's, another chicken concept, has 2 stores under construction right now, and will look for more as 2020 brings on new opportunities. Kind of going to fast casual, Elwood Shells was a sister of Elwood Shack. They started out opening in a food truck in the parking lot off of Summer next to Lowe's, and then found a permanent location this year in Cooper Young. Wolf River Brisket Company, active as well. They backfilled the former pizza place down in Olive Branch, Michael Lightman Center. Garibaldi's Pizza, we saw a shift from their Yates store that was delivery only to Mendenhall right next to Gibson's Donuts, full service restaurant with delivery as well. Watching Central Barbecue as they opened East Memphis. They are looking at some other opportunities within our MSA, but have been very active in the Nashville market. And this was after the partnership they made with the Wilson family. Your regular sit-down restaurants, so Let It Fly just opened probably in the past 30 days in Germantown. That's Mike Miller's sports bar / restaurant. Huey's continues to be active. Terry talked about the Millington Farms, so they opened a store in Millington and that development, and they're slated to open up in the Bridges of Camp Creek, which we'll talk about here shortly. Hot Dot 82 locations and still active in the market. Moon Dance opened in the Thornwood development in Germantown, again in the last 60 days. As we look at white tablecloth dining, Porch and Parlor should open soon in Overton Square. Iris, not so much of a movement or new restaurant, but Kelly came back in the kitchen and retweaked the menu, kind of going back to the basics. Judd Grisani opened Ronnie Grisani's in Regalia probably about 6 months ago. Again, kind of like Iris, Sweetgrass took the wall down in between next door and Sweetgrass to kind of make it one open restaurant. And then Coastal Fish Company opened, I think, in the last 2 weeks at Shelby Farms to backfill the vacancy there. Fitness and cellular. So we've seen Cycle Bar open a new location on Cooper in Midtown. Shred 415 announced that they will be going in the Peabody Place. And I think we're going to continue to see more retail down there, as Ron talked about with all the new developments, which we'll talk about those mixed use in a second, but also the larger tenants that are going in there that need these services. Shed Fitness, again, a newer concept. Delta Life Fitness signed a lease in Germantown across from the Apple Store. Hotworks is opened another location, and a few other leads. French Riviera is the only negative that we saw here. They have vacated Poplar Plaza, but they are actually out in the market right now looking for a smaller space that's, I guess, kind of better fitting with the boutique fitness craze that we're seeing now. AT&T has been extremely active last year. They've opened 4 locations in the past 12 months and are continuing to push for more in 2020. The most recent craze, and the Daily Memphian talked about this, is the seafood boil style eateries. You can see the stat here, 12 of 18 have opened in the past 6 months, which is, I mean, crazy. It's outstanding. We don't see that. So that will be interesting to watch over the next 12 to 24 months to see how the competition weeds itself out and how those do. Current construction projects. So the Bridges of Camp Creek, which I talked about, that is another Gil Ryan development. Camp Creek Parkway and Goodman Road in front of Lowe's, Home Depot, and Walmart. So 82,000 square feet in 2 phases. They've got a hotel concept. Current tenants include Huey's, Aspen Dental, AT&T, and Discount Tire. The marketplace at Raleigh Springs in Memphis was announced last week, I believe. That's a Wise development, and Sean Massey will be leasing it. It's a good example of areas like Elvis Presley Boulevard, Austin P, and there's pent-up demand for these tenants, and you can group them together and end up putting together a nice little small development. Millington Farms was a good example of that as well. The Lake District, I think we all know about it and heard about, driven past, seen the dirt moving. So that's a 161-acre mixed-use development at Canada Road and Highway 40. Brand new interchange was just completed. 132,000 square foot of retail. Another mixed-use development in Lakeland is the Lakeland Commons. That is going to be at the corner of Seed Tick and Highway 70. 40-acre development, 18,000 square feet of ground floor retail. As we track renovations, not necessarily new product, but Eastgate Shopping Center just is kind of still undergoing a massive renovation, tenant shuffling, downsizing of Burlington, the addition of out parcels, new landscape buffers, just really looking good in the East Memphis market and showing you that there's so much pent-up demand on Poplar Avenue, it will filter over or track over to Park or tertiary streets that are right next door. Aaron Way, Loeb just completed another facade renovation there. 4938 Poplar is the AT&T building just to the west of Mr. Pride Car Wash. They just completed a facade renovation. And then you look at tenants in the market that were not on this slide that are doing renovations. Target has been investing heavily in their stores. Kroger continues to invest in their stores in the market. And then one last shopping center that didn't do a full renovation but gave us a teaser, if you will, would be Poplar Plaza. They renovated the building where Tommy Bronson's used to be Regions Bank. AT&T has signed a lease to go in there, and so they did a facade renovation there to kind of show us what the rest of the shopping center might look like. The trend for 2020 and the remainder of this year tends to be mixed use. So as we track new development with retail components, the largest scales tend to be mixed use is what we're looking at. So the Snuff District with 15,000, Ron touched on that end of downtown. I would agree with him that this development is going to spur activity from the convention center all the way down past Mud Island. The Lake District we just talked about, 132,000 square feet of retail. The Clipper, as well as Union Row, are both downtown developments that Ron touched on. And I think what he said hits it to a T and will flow down to the retail. They are going to have to find that office tenant in that market rate for these to work. And without that, the retail will not be there. The Racket Club, we're still kind of looking at plans for that one to see what the final retail square footage would be, but 12-acre site in the heart of East Memphis, connectivity to, the Clark Tower, the Malco's property, just kind of a walking environment that they're trying to create there. The Cascades is a new development in Olive Branch off of 78. They're projecting 400,000 square foot of retail and hotels. The Fairgrounds, again, not a full plan out, but we know that there's going to be some sort of retail concept there abutting Central. And then Lakeland Commons we touched on earlier. The future of retail and the holiday season. So what we're seeing in the future of retail, and Terry touched on this as well, is service-oriented tenants are it's driving the force. Grocery-anchored centers, service-oriented tenants such as restaurants, health, nail salons, things of that nature. Dock in the Box has been real heavy, so medical clients. And the bankruptcies that we're seeing are starting to trend more towards mall-oriented tenants and power center-oriented tenants. That is starting to level out. I think the last real round of assets we're seeing here in Memphis from bankruptcies came from the Freds. We're starting to see those boxes roll onto the market as the landlords work out whatever type of legal battles they're having with Freds right now. And as we look towards the future in the holiday season, we're projecting a strong holiday season for shoppers. So record number of merchandise to be sent in according to the National Retail Federation's annual survey. And then shoppers between 35 to 44, which is interesting, plan to spend the most this holiday season. I think that coincides with folks with kids that they're buying toys for. And then gift cards remain the top, as they always are, because that's the easiest gift to give to folks. That's all I've got.
I also got a text from my friend and board chair, Andy Cates, over here. Not that Andy Cates, it's this other Andy Cates. It's actually funny that you guys are sitting in exactly opposite spaces. That's really weird. That he wanted to make sure I encourage everyone to do paid subscriptions, not just email subscriptions. And if you think Andy won't look your name up and check if you're paying, you're wrong. He recently at church, his wife made him stop looking people up in the pews and seeing if they're subscribing. So don't tempt him. But please do subscribe. Do more than the email. We do appreciate your support. Thank you all. And a reminder to sort of talk forward. I got a couple questions. We'll do Q&A, and when we kind of get tired of each other, we'll go upstairs and have a drink and eat some food. So I want to go back to Paul. All of it was very interesting. I made notes as we went. Paul, I was curious about the hiring you talked about and the growth you talked about. Is the new employees you're bringing in, I mean, give or take the percentage or the dynamic, are these mostly people that you're having to relocate in and hire from out of market, or are you able to hire in the market, or how does that ratio break down?
I don't have an exact ratio, but I can tell you most of our hires are in market. We have not relocated a lot of people to Memphis, and a lot of us fly back and forth. In fact, we're advocating with the governors in both states and with certain airlines CEOs about having direct, nonstop air service between Boston and Memphis. Let's all sign up together to make this happen. I just spoke with Governor Charlie Baker the other day again about it, and he is actively supporting this, as is the Memphis Airport Authority and Boston's Massport. We've had 50,000 applicants since the beginning of the year, and that's primarily here in North America, and we have a good pool to draw upon here in Memphis, so we do not have to move people here.
Okay. And if I get everyone to pull their microphone forward, because you want to push it away because you don't want it in your face, but you got to pull that forward. I was going to go to Terry, and I was curious I think you answered, but one thing I wrote down was the outside money and more outside money. You talked about South Korean money. What is that? Is it as simple as the costs here are just so much more attractive than other markets, or is there another dynamic going on?
The biggest driving force is the highly competitive markets such as Nashville. We do have higher yields here, but we also are fundamentally very strong, especially industrial. And of course, we discussed that heavily, industrial, but also on our office. We just don't have a lot of extremely strong swings in our economy. We're also obviously FedEx and Indigo Ag, but I mean FedEx, due to its size, that's very important to us, but overall still we just really aren't that dependent on one particular industry, and we just don't have the wild swings as major markets do. So I think investors see that. They do.
For Jack, most of the developments you were pointing at were south of the border, right? They were in Mississippi. I mean, one was in Fayette, I think. I don't think any that you pointed at were in Shelby County, if I'm right about that.
That's correct. There is some expansion going on, and Amazon's first flag in Memphis was a build-to-suit in Memphis, so they saw the value of being in Memphis. A lot of developers over the last several years have gone and taken large land positions in North Mississippi. One, because Memphis has been built out. There's not 200 to 500 acre parcels that a developer can go take down here and build a park. So that's part of it, and it's and this is something it's not new. It's been going on for a while. So that's where most of the newer products are being built, because that's where the developers have gone to take their land positions.
Carson, you mostly pointed to smaller. I mean, I remember doing this back at the old Daily News 8 years ago, and we were pointing at big box realtor and Targets coming in, probably that Target that is now being turned into storage units. I mean, is that just over? That notion that big and that's just not going to happen anymore? It's all going to be these small, a lot of those were local businesses you were talking, which is great, but is that the near-term or long-term future for your market?
Yeah, the majority of the transactions we're seeing are below 10,000 square feet. You can count probably on two hands the transactions over that. They're few and far between compared to what they were. We're seeing a lot of local, regional, still national brands, but it's trending away from large power centers that we were so used to in the suburbs, from days past.
Do you want to break news? What's going in the commercial appeal building? Come on, you almost said it. You might as well just say it at this point. I mean, There's not a
TBD.
reporter sitting right there recording you.
There,
There's not
there
at
are
all.
no reporters in the room?
No, there are. There absolutely. Yeah, off the record, totally fine. We're not filming this. We're not recording it. I don't have a TV show. No, you're fine.
We have good things.
We have good things happening. Okay, all right. I think we will. We've listened to a bunch of presentations. I want to thank the presenters. I want to thank, I have notes I have to thank. Don't stand up. The wine and cheese reception is upstairs. Please, I know people will have questions one-on-one for the speakers. They're going upstairs too. So if you can kind of let them get upstairs and we can all talk up there. Thank you all for being here. Appreciate it very much.